I'm Ms. Vung. Let's look at taxations and earnings in Australia. Taxes. An adult in Australia usually spends roughly $34,000 a year. So if you earn only $18,200 or less, in Australia you don't have to pay taxes because you probably need that money to pay bills and survive. Tax is money people and businesses pay to the Australian government to provide services such as health or defence, roads, rail work, so the money the government takes to take care of you. The more you earn, the more taxes you pay. Here's the taxable income table. So the amounts of money on this side are called brackets, and depending on which bracket you belong to, that is the amount of taxes you pay. For example, let me explain. Let's say you earn $40,000, then you belong to this bracket over here. So therefore you pay this amount of taxes. So that is 19 cents for every dollar over 18,200. Remember, 18,200 is the amount of money that you can earn up to before you have to pay taxes. So how much more than 18,200 do you have? So we write down the formula. So 40,000 minus 18,200 is how much more than 18,200 you have. Then multiply by the 19 cents. And you would write it at 0.19 because we work in dollars. So you would have to pay $13,832. What happens if you earn, let's say, 90,000? Then you would belong to this bracket over here. So you would have to pay $5,000.92 and 32.5 cents for every dollar over 45,000. So first of all, we need to work out how many dollars over 45,000. So you would take 90,000, take away 45,000, and for that amount, you would multiply by 32.5 cents or 0.325. And then after you work that out, you would add it to $5,092. So recap, this part here works out how many dollars above that amount. Then you multiply by that many cents. And then you add the amount it says over there. Try these questions again. Give it a go. Make sure you get to the same answer, which is $19,717. Medicare. In Australia, we pay Medicare levy, which goes to the government, and that amount helps us take care of our health system. Most people would pay 2% of their taxable income. Some people that earn a lot more might pay a bit more, but all you have to worry about in our exercise is that we pay 2%. Let me explain. Let's say you earn $50,000, then you would pay 2% of that, which in your calculator you would type as 0.02 times 50,000, which is $1,000. One more example. Let's say you earn $85,000, then 85,000 times 2%. Again, you would type 85,000 times 0.02 on your calculator, and you would get $1,700 or $1,700. So Medicare is pretty easy to calculate. Practice these two questions. Make sure you're typing and getting the same answers. There are a lot of words in taxes we have to learn. Here's your boss or your company, the government, and you or me. What are the words we have to learn? So the amount that your boss or your company pays you is called the gross salary. It comes out of him. But this amount that's before tax is not the amount that you get. Because let's say that's your gross salary, some of the money goes as tax to the government, and the other sum of the money might be the Medicare amount. So what you're left with is called the net salary. So the gross is the one that your boss or your company pays you, but what you actually take or you actually receive in your bank account is the net salary. There are a few more words, so let's be very careful with these words. We're going to add a couple more words to this. Other things that happen before Medicare and tax are government allowance, which means the government might give you money. For example, if you have babies, then you get family tax benefit. If you're a teenager and working or studying university, you might get youth allowance. So the government supports you. Other things that you don't have to pay tax for are like deductions, such as if you go to work and you have to buy work gear, then you don't have to pay taxes on that because you've already spent it to go to work. So these changes to your gross salary form the taxable income. And from the taxable income, that's how you calculate the Medicare and your tax. And then you take home the net salary. Let's do this one more time because I know it's confusing. We're almost there. So gross salary, amount your boss or company gives you. Then you might add things such as government allowances like family tax benefit or youth allowance. Then you subtract any deductions you spent to go to work, such as your car or other travel fees, your private health, union fees, so deductions. And then once you have that amount, that's called your taxable income. And then you take off your Medicare and your tax from your taxable income. And what you're left with is your net salary. Copy all these words down and write down the meaning that you understood from this PowerPoint or this slide, and also write down any translations to any language you speak. You really need to know these words. Do we pay taxes all in one go? No, we pay something called pay-G. Just like our salary, we don't earn all our amount at the start of the year in one giant amount. We don't pay taxes in one big lump. We pay as we go. Now, this amount is called pay as you go, hence pay-G. It is taken out of your weekly or fortnightly or monthly income as you're getting the money in. Let's see how it works. We're going to use a table, which is the same table as the government or your boss uses, to figure out how much to take out from your gross pay. So here's the table. We have the gross wage and we have the tax to be taken out, or the pay-G, and it goes across. Again, it's the same thing, gross and money taken out, etc., etc. But it goes from 450 and more and more and more. Hopefully you'll be down here somewhere earning that amount each week. So let's do an example. Wendy earns $900 a week. How much is her pay-G? So $900, let's look for it. It's here. So she has to pay $148 in taxes and Medicare fees, called as pay-G, each time she gets $900. It gets deducted automatically, so she actually doesn't have to do anything. She'll just see it on her pay slip as minus $148. What percentage of her income is deducted? So the percentage would be 148 over 900 times 100%, which is 16.44%. Almost there. If she receives $98 in youth allowance but has deduction of $71 in superannuation and $5 in union fee, what is the net pay? Now there's a lot of words here. I would recommend underlining any deductions or any minuses in red, so the 71 and the 5, and anything that's adding to your salary, so in your allowances, in blue. So your total income would be the $900 that you get paid and the $98, whereas your deductions are $71, the $5, and the pay-G. So 148, the pay-G, the 71 in super, and the $5 in union fee. Now, what do you take home? What is the net pay? That is the total income minus the $224 in deduction, which is $774. Thanks for listening. You might want to copy this example down. Try it yourself one more time to make sure that you're following the same steps. And I'll see you next time. Bye.